First of all, what's the weight of foreign activities in SBM Holdings net profit?
Well, over the last 12 months, we've doubled the level of contribution from overseas activities in terms of income. But if you look at where we are in terms of our evolution, we took over a small bank in Kenya last year, a former Fidelity commercial bank. We have a limited operation in India that we're turning into a wholly owned subsidiary, as you well know. We have a small but growing operation in Madagascar and a license to operate in the Seychelles. So income's doubled. We're still subscale, and the contribution to profit is currently negative, but that's improving year on year as well, and we expect that to turn positive over the course of the coming year.
Do you expect to break even in 2018, fiscal 2018?
I think it's very difficult to give specific projections, but my ambition is, yes, we will break even or turn a small profit internationally in 2018.
The main contributors to this shift in net profit losses, so what will be the main contributors to this?
Well, if you think about where we are as a business, we're kind of 2 years into our revised strategy, which is to act much more as a bridge between Asia and Africa, recognizing the linkages between Africa, Mauritius, India and other parts of Asia. So we now have an operation in Kenya with the acquisition of the carved out assets and liabilities of Chase Bank. That will give us a certain scale that we've lacked in Kenya and turn that into a more sizable operation.
So you're going to merge both?
What we've done is we've reached agreement to take some of the assets and liabilities of Chase. So we're not buying Chase Bank, we're buying assets and liabilities out of Chase Bank in receivership, which will merge together with our existing operation in Kenya. So you create a bigger bank. Our estimates are that we go from about being the 38th largest bank to 11th or 12th when you combine the two entities, which makes it a good Tier 2 bank with an ambition to be a Tier 1 bank over time. So that's obviously a significant change in scale in Kenya.
And your assets under management will be about how much when you merge everything under the SBM Kenya?
When we merge everything, it depends upon exactly the size when we take it on, but it'll be about $700 million. So in India, as you know, we were the first foreign bank to be granted a wholly owned subsidiary license. We're in the final stages of putting in the final submission to the RBI, and hopefully that will lead to operationalization of that license in the near future. Our ambition is to grow from our current 4 branches to probably, give or take, 10 in the near term, with a medium-term ambition of about 20 branches. We recognise that's a small number of branches for such a big country, but we want to learn about India. We want to develop our presence there.
Any specific target for the from 4 to 10?
I would hope we would do 4 to 10 by the end of next year.
It's spread in Delhi, Mumbai, or how does it go?
It's a spread of metro areas with obviously a small number of rural branches that go with it as per RBI regulations, and we're very keen that we do the right thing as well, and we abide by the spirit as well as the letter of RBI regulation.
As mentioned before, you are very cautious in. Has it changed now?
No.
The mood is much better now in India.
Well, like you, I've seen all the reports saying it's the fastest growing big economy again. The mood has turned, things are significantly better. But yes, we do remain cautious on India, and that's not because of any innate distrust of the country. It's just we've seen many banks over the last 10, 15 years go into India and lose money because they don't understand the country or they don't understand the different areas. It's a vast country. It's vast. And if you've got 20 branches, you don't cover the country. It's not about you've got a representative sample. You're operating in microeconomies, but microeconomies that are actually bigger than some countries' economies. So what we want to do is we want to learn about the country. We want to develop our capability. We want to build a retail client base. And we want to be sensible. So it's not about being risk averse. It's not about being overly cautious. It's about being sensible and a little bit humble.
And not make the same mistakes as before.
As you say, not make the same mistakes as before.
Kenya is growing. You have assets of about $700 million USD. In India, you have a very well-defined plan, as you
Indeed.
said. And in between, you have Seychelles, Madagascar. There are other economies. You have Ethiopia, which is fast-moving, west of Africa. So, how do we do about these countries? And you see growth in Rwanda, for example, in Uganda, in Ivory Coast, because everything seems to be back to normal over there. So.
Yes. I think you have to go back to our strategy. And there are two pieces here. You have to look at our strategy and you have to look at our capability. So our strategy is to build on the linkages, the bridges between Asia, Africa and Mauritius, and recognize that there are links there. So having an operation in India, an operation in Kenya, and an operation in Mauritius that feed off each other, that help people to do business across continents is really important. So that's part one of the strategy. And we'll come back to that in a minute because it's got pertinence. The second piece is we are a country that is firmly part of the Indian Ocean. So doing business in Mauritius, doing business in Seychelles makes absolute sense to us as being part of that Indian Ocean economy. So those two strategies work in parallel because we want to be a proud Indian Ocean bank, but we also want to be that bridge between continents as we talk about. Then I said you have to think about capability. We're a modest bank. We're large in Mauritian terms. We're not particularly international. We need to be cautious about not trying to do too many things too quickly. So part of this is about being aware of our own limitations, so growing our capabilities. Part of it is about how do we fulfill the strategy. So our ambition is not to be everywhere on the African continent. It is not to be a physical presence everywhere. It is to be working on those bridges. So that means where are the natural dropping off points? So you talked about Uganda, you talked about Rwanda, you talked about the Ivory Coast, Ethiopia. Ethiopia is different because of course foreign banks aren't allowed to enter Ethiopia anyway. So that kind of knocks that off the radar. And indeed, people have been saying to me for the last 15 years that Ethiopia will open up, but no one can tell you when. But out of the other countries, the only one that's, for me, an immediate dropping off point potentially in terms of international business and bridgeheads would be Côte d'Ivoire, because it's francophone, and it has a lot of those linkages with the presence of the African Development Bank, amongst others.
So in Côte d'Ivoire, so do you see SBM going over there? Have you started prospecting?
No, I want to be absolutely clear. Our priorities are to deliver on Kenya, deliver on India, continue to grow the Mauritius business, deliver on Madagascar, and deliver on Seychelles. And that is enough for us to do at the moment. So we won't try to do 5 other things as well. All I was saying is Côte d'Ivoire is a logical dropping off point for a bank that thinks about bridges across continents. We aren't doing any work on it. We haven't started any work on it.
Good.
I've made a very clear promise at the analyst meeting and indeed to investors that our job is to execute on the things we have underway. And that's what we're going to do.
Okay. So you've already raised the capital from the market, I think.
Well, we launched it this morning.
Launched it this morning, and what's the response?
I haven't heard anything yet. I mean, we obviously did some pre-marketing. The pre-marketing was very positive. People like the story, I think. They like what we're trying to be. They like the fact that we've got a great domestic franchise. Let's be clear about this. Our Mauritian business is very strong. The potential for our international business is very strong as well. But it's about being disciplined.
The funds would go for international to consolidate international activities.
Well, some of them we intend to use in Mauritius. So some of the funds will be used domestically to continue supporting the domestic economy, the growth of the domestic economy, and the growth of our long-standing clients. That's really important to us. We recognise that we are a Mauritian bank, and we have a duty to the people and economy of Mauritius. Some of it will be used to invest in India and in Kenya and in growing that franchise. And again, we think that all supports the Mauritian economy.
From your perspective as a group CEO of the second biggest lender in Mauritius, when you see what's happening, we have banks. Are we overbanked? 1.3 million people, 1.8 million or 1.9 million cards in circulation. So is it too much for a small economy?
I don't think we're overbanked. I can't give you a detailed answer because I'm a newcomer to Mauritius, you know that. And that's a question that might be better asked of our Mauritius CEO. But I've worked in other economies. I've worked in Singapore, I've worked in Dubai, both of which have the financial center status that Mauritius has as well, but both of which have significantly greater number of banks. So I've seen much more overbanked economies. I don't think this is particularly overbanked because I don't think you have a huge number of domestic players. What you've got is a number of players in the financial center industry and a limited number of domestic players. And let's be honest, I think competition is healthy. So long as you don't end up with a lot of weak banks, but you have a modest number of good banks capable of serving clients, that's a good thing.
So if there's an opportunity to buy a local bank, would you go for it? Because I think there's one
I don't think so.
down the road.
I don't think so. I've heard that there is one for sale and has been for sale for a while. But I can't see why we would, to be honest. We have a very loyal client base. We've been in business for 45 years. We're very proud of how this has grown organically for the people of Mauritius, by the people of Mauritius. I'm very proud that that is part of what I've joined, and I'm very conscious of that legacy. I'm not sure why it would necessarily make sense, unless it was a particularly good cultural fit and a particularly good client base fit, why we would want to acquire rather than grow organically here.
Is the fact that you've been in risk management before, has your approach kind of scaled back ambitions?
No, I don't think so. As I said, I've spent half my career in risk management, half my career in the front line and running businesses. So I would say in no way, I'd say the two are complementary. Thank you very much.
Thank you.